Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Rubicon Organics, featuring Margaret Brodie, the CEO, and Glen Ibbot, the CFO. We recently initiated coverage on Rubicon about 1 month ago with a buy rating and a $1 per share target price. Rubicon trades on the TSX Venture under the symbol ROMJ. Thanks for being here.
Thanks very much for having us. And we're really thrilled to be the first cannabis company that Atrium's covered. And we're very, very pleased to be in that. I hope there's more to follow because the cannabis industry is certainly suffering from the stigma of the past. And there's some great companies emerging now, and we are amongst them.
Absolutely. So Margaret's going to kick it off for us with a brief company presentation for the investors that are unaware of the story and just learning it, and then we'll get into some Q&A in the back half.
Fantastic. Well, welcome everybody. We will try to rip through this in about 10-15 minutes, and then we'll take some Q&A as we go. So firstly, please have a look at our disclaimer in detail, as we will be discussing some forward-looking statements today. So what is our vision? Our vision is to be the most trusted house of premium cannabis brands, creating elevated experiences for people everywhere. And each of the words in here is very important to us: trust, premium, and brand. And you're going to hear a little bit about that as we go through this presentation, and more to follow. So who is Rubicon Organics? We're the #1 premium licensed producer in Canada, and we're very proud of that. We have a portfolio of premium brands, so Simply Bare Organic, Wildflower, and 1964, and I'll touch on those in a minute. We have products across the categories in there, and it's really designed to satisfy different consumer needs. We have 2 facilities located here in British Columbia, where I'm sitting today. Our Pacifica facility, which is our organic facility, located in Delta, British Columbia, and our Cascadia facility, which is located in Hope, BC, and is just turning on. That gives us total production capacity of around 15,500 kilos of premium flower. We have a very experienced management team and board of directors, and actually it's just been recently announced that Glen Ibbot has come on as our permanent CFO, and I'm very proud to be here today. That was announced yesterday. We've just reported our Q3 net revenue growth of 16% year on year, but 25% up on the 9 months at 15.6 million in revenue for the third quarter. And we've had 6 consecutive quarters of positive adjusted EBITDA. So we're sitting in a great position. We are expanding, and this is sort of our biggest story to come, and certainly not priced into what the stock is today. We have a lot of unmet demand, and we have purchased earlier this year a facility that was previously owned and operated by MetaPharms, now in our hands. It was the first licensed facility in British Columbia. We closed the acquisition in June of 2025, and we did some work on it over the summer, and we got the licensing in mid-October. Very, very pleased. It's a huge milestone and value catalyst for us to be unlocked. We got the facility for, in our view, a steal of a price, $4.5 million. We're putting about $1.6 million of capex in 2025 into it. The majority of that has been now completed. And we expect there'll be operating costs of about $1.5 million in 25, and we're going to see that run into 2026 before we expect that we're going to actually hit our quality standards. So we're going to have a revenue catalyst midway through next year when we start to really get this facility pumping. But we're very excited about it, and we'll talk about it a little bit more. So how have we been growing our business? We've been growing our business through our single asset, through adding different product lines and co-manufacturing and contract grow. But now we've got our own internal revenue catalyst, which is, I just discussed, the Cascadia facility. We also have about 2,000 incremental kilos of supply, which adds into our revenue channels through multiple long-term third-party supply agreements. We've been adding into new categories. So we've launched into the all-in-one, which to many who don't know the categories within cannabis, the largest categories are flower and pre-roll, so joints that are inhaled. The third largest category is the vape category. So there's something called the 510 cart, but there's also an all-in-one. We've just launched into the all-in-one category. It's the fastest growing vape category there is. We're really pleased to be there. We also recently launched, or 2 years ago, launched into edibles. So we're across the largest categories in cannabis. This year, we've done 3 test shipments into the international markets. The world is opening up to cannabis, and we're excited to be there with our premium brands. Now, we've just done wholesale drops to date. We are looking at opening up new channels, and we are learning this year. We're calling it our test and learn year. So we'll be less than $1 million of revenue overall on the year, but really happy to get the experience and the regulatory learnings and the partnership learnings that you get from testing out with new markets. We also, cannabis is very similar to fashion, and genetics and new news are very important. So kind of like you'll get a new strain of apple, we'll get new strains of wheat coming out, and that's what we're really known for. And we've done a lot of work on. We think is going to really add value to our business as we continue to build our genetics library over the next few years. We're also looking at our gross margins and improving them. So we invested in pre-roll automation in the first half of the year. That project is now complete, and the cost savings are expected to continue to be delivered. It was about $1 million in capital that was invested, and we expect to deliver over the course of 12 months a return on invested capital with about $1 million of savings. So a great return. So going forward, we're looking at driving incremental gross profit. We're going to see that out of multiple elements in our business. Oh. And Glen, I'll pass it over to you.
Yeah, thanks, Margaret. So just leveraging off of Margaret's comments on the company and doing a lot with the assets that we have. So Rubicon has been doing a tremendous job of growing the business, even though we've got significant unmet demand. So getting the most out of the facilities we have and our relationships with co-manufacturers. So that 16% growth in Q3 over the prior year, I think is quite a story given the fact that it's being taken from a facility right now that is, fairly optimized in terms of the ability to produce cannabis. So, that's a nice story, and the growth across our big driver brand, which is 1964, which is a premium product, but certainly well loved in the industry, and it's a great brand. Nice to see continued progression there on pre-rolls and flower and vapes across the board. So a real strong driver of the company. Margaret mentioned the gross profit. The last number of quarters, our gross profit or our gross margin percentage has been in the low to mid 30s. Now that's pretty good given, the constraints that we have with the, source manufacturer, et cetera. But we do see a lot of room to continue to improve that over the next couple of years. I'd say out, 18 months, we're looking to get into the mid 40s in the gross margin percentage, and we'll see where we can take it from there. We'll achieve that as we bring on the new facility, Cascadia, and put more volume through the post-harvest process and packaging at our Pacifica. So the scale effects there. But we also have a lot of opportunity on optimizing costs on the operations side. So, the pre-roll automation, great example. We just implemented that. It's $1 million of cost savings at current volumes, and that's like a roughly 1 year payback on the investment there. We have a number of those opportunities that we're just prioritizing right now. And then this is an agricultural industry as well. And so the opportunity on yield and getting more, out of each strain is quite compelling for us. And that's got a multiplier effect. Both it gives us more revenue, but and without a lot of additional costs on the cultivation side, same energy costs, same labor costs, same nutrient costs. So a nice impact to gross profit there. So nice as we look forward to see the track in terms of delivering progression on both revenue and gross margin percentage. Excuse me. EBITDA in Q3, $1.7 million. We have been delivering positive adjusted EBITDA for the last several years, and in fact, for most quarters, delivering positive operating cash flow as well. That shows the purpose-built, approach to this business, to Rubicon. It's been thoughtful, growing the business within our means, making sure we've got a long-term sustainable business. Again, our drive, Margaret and I are completely aligned here with the rest of the company. We're going to drive revenue, gross margins. That bottom line is going to continue to grow both EBITDA and cash flow basis. Reiterating a few of the metrics here, we'll leave these in the posting for you to take a look at. I think we have a healthy balance sheet with $24 million in working capital at the end of September. So that gives us the power to continue to invest and grow the business. And then we recently, we announced earlier this week that we just placed $4 million of term debt and line of credit, which we intend to use for those margin accretive projects. Thanks, Margaret.
Great. Thanks, Glenn. So, how do we do what we do? It's through our house of premium brands, and we've touched on them already. Simply Bare Organic is around organic, interesting genetics that's looking for the connoisseur. Very super premium flower first product. 1964 Supply Co. is a premium product, not super premium. Difference in price is about $10 on a 3.5 gram purchase. And it really allows for the largest and heaviest smoker to get into a premium product at a great price. This brand has gone from strength to strength, certainly is the engine of our business. Our Wildflower brand is our wellness offering, and it's for it's really the topical has led the way with this, and is very well loved and well used by the consumers that have it. And we actually don't want to sell any Homestead. Homestead is the product that is when we have something that doesn't quite meet our quality standards, we put it into Homestead. It's still a very good quality for money, but I'd always love that number to be zero, because we're agricultural. We recognize we often need to turn our products into cash, and that's how we do it. Capturing market share through leading quality, that's what we are here to do, and you can see the growth that we've had consistently across the business. The challenge that we've got is Quebec, and we're very happy to see the growth that we've had overall. We've also got really solid market share in the categories in which we play, and we've been really recognized across the industry. So last year at the sort of Oscars of Canadian cannabis, which are voted on by the bud tenders, extremely important that the person who's the influencer is recognizing your brands, because they speak to almost every consumer that walks into a store. They have to purchase the product over the counter, and the KIND Awards are what are recognized and voted on by bud tenders. I myself couldn't vote, and last year in 2024 we won 11 KIND Awards, including Brand of the Year, Topical of the Year, Vape of the Year, Flower of the Year, Edible of the Year, and we were also awarded at the Grow Up Awards in May the Producer of the Year. So we're very proud of what we've established, and we're looking to be some of the first brands that are established in Canada. But hot off the press, our team was last night at the KIND Bud Tender Awards, and we just had an incredible result there as well. There were 11 original awards. We won 7 of them. Brand of the Year, Craft Brand of the Year. We won Flower of the Year, which is incredible because it means that Rubicon, is this relatively small company, has won 3 of the last 4 years of Flower of the Year. We're very, very proud of that. So you can see some of the team up here and some of the awards. These are just pulled from our internal meeting we just had celebrating the win. So I thought it'd be fun to show it today. Next, what makes us different? We grow an organic living soil, and it's the hardest way, but it really gives the cannabis that premium, richer taste, full aroma, and we care about quality. We believe that's how brands are built, and that's how premium brands are built. So we've got premium pricing power, we've got loyalty, and we've got consistency. And that consistency is what is building a brand promise time and time again. We don't see others in the market with what we've got, and we're going to lean into our niche differences. So a bit of background, Glenn, maybe I'll pass this over to you.
Yeah, thanks, Margaret. So I will say I've been with the company on an interim basis for 6 months and just joined this week on a full-time basis, and I really appreciate the opportunity. It's a great company. When I look at the capital structure here, I see a few things that I want to point out. One, Rubicon has been built very thoughtfully. There's been prudent capital raises when there has been capital raises. Earlier this year, Margaret led a raise of $4.5 million, and that was with specific, growth and margin accretive opportunities. In this case, it was buying the Cascadia facility. So you see a cap table here that is inflated, as you might see in some other LPs that have been around for a while. I will point out also a really large insider management shareholdings, 42%. And why that's important is, one, it shows the ongoing support for the company. Those folks that know the company and know where we're headed are still committed to it. And in fact, we're participated quite strongly in the last capital raise in the spring. So, great vote of confidence there. And you can certainly see that management and the board are very aligned with shareholders in our focus on driving value in the company here. I will also say we are pleased to see increasing liquidity in the stock. So over the last several quarters, just more volume trading on the stock, and which is great in terms of our, for our shareholders and for the opportunity for some of those folks that want to get in to get in a rational way. Just a couple of comps here. We don't have the names here, but you can guess pretty easily our peers. I will say, from my perspective, what I see here on these comps is that the market is still yet to reward Rubicon for the value we're creating. Now, we're fine with that because we know the inflection is coming. Certainly as the Cascadia facility comes on over the course of 2026, we're able to deliver that revenue, increase our margins. I'll say this in a pretty forceful way. We want to force the market to pay attention to the metrics here. So, the comps have us, whether it's on, revenue multiples or EBITDA multiples. We've got some room here, I think, to grow in terms of valuation. We're perfectly content to take the next couple of quarters to prove that out. But, we have a very clear path to doing exactly that. Margaret?
Great. So, all of this is to say that there's a lot of growth ahead and for Rubicon with our Cascadia facility turning on and the growth that we've been able to drive really organically. But, is the industry still growing? And I want to assure you that actually in Canada, it is still growing, and it's growing quite a lot. There's still a number of people consuming from the legacy illegal market. And we expect, as many of you out there probably don't drink black market alcohol, we expect that's going to move with cannabis over the course of the next 10 years, and that's going to drive real growth. But we're also seeing new users come in and new people discover cannabis over and in favor of alcohol. So we see strong growth in the Canadian market. We also see really tremendous growth and demand coming from the international markets. And what we have learned is there's new facilities coming online in the mainstream and value categories. So with cannabis, as with any products, there's good, better, best, sort of a mainstream product, a value product, a mainstream product, a premium, and then a super premium product. We play in the premium and super premium categories. The international markets and the world is turning on to weed, and there is not net new facility coming online in premium. So with the genetics library that we've got, the awards and track record of consistency and brand building we've got, plus the opportunity ahead of us with Cascadia, we're really very bullish on what's to come for growth. So really, if you wanted a quick snapshot of where we are, we've positioned for growth. We just got to continue on with the execution. And if you look at our track record, you can see we've executed very well on the promises that we've made. We've got 3 years of soon to be 4 years of profitability under our belts. We've got a strong balance sheet and liquidity that Glen just touched on. We've got leading and trusted brands that are award-winning and world-class genetics. And we've got a very experienced leadership team and board of directors. So we're very proud of the position we're in and here to answer any questions. And Nick, I think this is the moment I pass it over to you.
Perfect. Yeah, that was a great overview. Appreciate you walking us through the story. It's very exciting. So maybe the first thing I was thinking about was zooming out on the premium category. So what is the supply and demand dynamic like? Is it growing faster than the rest of the market? And what do the competitors look like?
Good question. Look, the premium category has moved quite a bit, and we do believe that the premium category skews into the legacy market because the premium consumer still likes to have the choice, and they often buy in both markets. The data is very messy in Canadian cannabis because we don't have Nielsen data. So we have different ways in which we pull it. And arguably, some data is just pulling anything that's 20% above average cannabis price that month is considered premium, which isn't truly how brands work, and we know that. So, some data says that the premium segment is growing. Some data says that the premium market is shrinking. All that is to say, we are growing, and we believe that there are more premium consumers out there as the market grows. People are moving along the experience curve. And so we want to make sure that we're there to satisfy that consumer as they go. The Canadian market being different than the international market, which I don't think has truly recognized premium yet. For example, 6 months ago, I was in Berlin at the International Cannabis Business Conference, And a number of the international groups said, yes, we want premium, but we're not going to pay for it. And we don't really think the consumer's there. And in the last month, a number of them reached back out and saying, God, we need a premium strategy. We've got to move to premium. So it depends on where the market is in terms of what's happening. And this is becoming a global marketplace.
Okay, amazing. And then kind of what pockets of the market are you seeing the green shoots, whether that's from like a product perspective or an innovation perspective? Where are you seeing that?
Number one growth area this year remains in the vape category. It continues to grow as consumers move to that without the smell, the convenience of vape, all the rest of it. We've also seen tremendous growth this year in pre-rolls. And what we believe between vape and pre-rolls, that means is a real rise of convenience. And the consumer starting to trust brand and trust the experience that's there. So they don't need to buy flower and go through the ritual of rolling their own joint. They trust that the company is putting together a great product that they can go out and purchase.
Okay, well, that makes sense. And then Glenn, for you, I know you guys were saying gross margin, you're trying to get it up into the 40s over the next 18 months. How do you see that playing out? Will that be linear, or there'll be a couple rougher quarters in there with Cascadia, but how do you get there over time?
Yeah, listen, it won't be linear. It'll be stepwise. There will be, I'm going to say, some headwinds on the margin percentage profile. Some of the unmet demand is in larger format for us, so large pack pre-rolls, large volume flower that we're not currently meeting. Those bring lower prices and lower margins. It's all incremental dollars on the gross profit line. So I'm not going to say no to it as long as we're fulfilling all the smaller stuff. So that, on a percentage basis, that'll put a little bit of pressure on. However, we've got a number of projects identified, and I should say initiatives rather than projects, because they lie across the commercial organization, across their cultivation, across operations, across SG&A. It's all meant to, what we called, caption this as sweat the assets. So we've got some wonderful assets. We've got now Pacifica and Cascadia. We have great co-manufacturing relationships, and we've got the talent. So we've invested here. We've got great opportunity. So now we need to sweat those assets. We need to get more out of them. So, it can be as simple as automating, like the pre-roll automation took our, labor on one shift from 10 to 2. So, that sort of thing allows us to scale. So that sort of thing is kind of a no-brainer. But there's other things that we can do along the same lines in terms of continuing to make operations more efficient. It is agricultural on the yield side. So, if you get another gram per square foot out of your facility, that adds up, that's, $1 million a year on revenue without a lot of additional costs. So you can see whether it's through just the ongoing professional, approach to continuing to, improve cultivation through environmental controls, nutrients, sort of, just kind of fine tuning, or even just strain selection. So some of the new strains, we've got lots of great genetics coming through, but some will yield significantly more than others per square foot. So I think the bridge or the roadmap to get us to the mid 40s for us is very straightforward. Now we'll start talking to the market more about that over the next couple of quarters. Some of it is fairly light in terms of capital and OpEx needs, and some of the larger opportunities, some bring a little bit more support needed from the C-suite here. So we'll conclude on some of those and talk to the market over Q4 and Q1.
Okay.
Yeah.
And then on the international markets, you guys have done a couple shipments now. How do you see that playing out over the long term? Can that be a 20% of revenue segment over the next couple of years? And what markets are you really looking at the most nowadays?
So we expect we need Cascadia to be online to have enough biomass to make sure we're satisfying our Canadian consumers. Like having a strong domestic rec business and winning there actually gives you the right to go into new markets and launch brand. Okay. So we really believe that winning in a very competitive market is critical. So we need Cascadia online to have enough biomass. And then from there, look, we are still, we haven't announced where we're going and what our strategy is. We typically want to underpromise and overdeliver. So what we want to do is you can expect more from that probably by the end of the first half of next year in terms of what we're thinking, but we certainly are testing out a number of things and putting the time in to make sure we've got a very clear strategy on being best to market. We don't believe in premium. You need to be first to market to win. we think being best to market, and making sure that when we do deliver a product that we can do so consistently for the patient, because these are medical markets, and that they can trust on the brand that they're purchasing, and that we get the repeat. So we talk a lot about in the Canadian market, you get the trial often because of the brand name, but it's actually about the repurchase. And then we want the recommend, that someone would say our product is great. That's critical for us. And that's the approach we're going to take into the international markets. So what markets do we like? Well, the three that we've looked at are very interesting, or that we've shipped to: Australia, the UK, and Poland. Germany, people talk about. France is turning online. Switzerland's there. I have my suspicions of where we're going to go, but we're still doing the strategy work, and it will be driven off of a strategy and a detailed strategy, rather than a lot of people, I think, go out and just blanket fire across.
Yeah.
That is not the Rubicon approach. We want to do something, do it well, and win.
Okay, yep, that makes sense. And then just the last thing I wanted to touch on was, what are some catalysts investors should be watching out for over the next couple of months or quarters?
The number one thing for us is the execution of Cascadia and getting that online. So we've said that the midway through next year, we expect to be able to hit 1964 premium quality. I would challenge the team to say, can we do it faster than that? Of course, there's pressure to do that, but we cannot. We recognize that any new facility takes a minute to get up and running. And once we start going, we need to make sure we're satisfying our customers. So the success of Cascadia is significant. We did just actually have a very important catalyst that we talked about in our con call this morning, and I don't know if people understand the importance of it, but there was a strike here in British Columbia through the month of October. And that strike meant that the distribution centers were shut down for us as a supplier, and we were able to fulfill demand in other parts of the country and other parts of the source. And to other platforms, medical platforms included, which demonstrated the demand for our product. So we have high confidence in the incremental biomass coming up, being able to sell it at this stage, unless there's some sort of massive event, where miracle premium weed starts flying from the skies. I think we're in a great position going forward.
Okay, no, that's great to hear. Yeah, those are the main questions that I had. So thank you both for being here today and walking our viewers through the story. And we're going to look forward to following along Rubicon and the quarterly results and the milestones that you guys press release over the next year. So for our investors and readers that haven't seen the research yet, go to our website, atriumresearch.ca, where you can download all the reports on Rubicon and get up to speed with the story. And then Margaret and Glenn, thanks again for the time.
Yeah, thanks, Nick.
Thanks, Nicholas.